Good morning, ladies and gentlemen. We're just letting everybody through. So if you can just all come in and find a seat. I think there's some seats at the front, Mark, isn't there? There's plenty of seating area.
Couple of seats available.
Yeah, morning, Aidan McCarthy. I think Aidan was first wading in. Just welcome to everybody. We have had about 120 register for this, so we do expect quite a lot of people coming, and we really appreciate that everybody has joined in today, haven't we, Mark?
Oh no, definitely. Thank you so much for sparing some time this morning to take part in this session. It's the first in a series of educational webinars that we'll be running at Tandem, and I really hope that and think that you will take something from each of them and everyone that you can attend. Good morning, Aidan. There you go. It's very kind of you to pop that on the chat there.
And we will be recording this, so guys, we're recording this that you can then watch afterwards. We will just have it tidied up, and we will be able to allow you to watch this on catch up in case you want to watch it again. And what we'll do, Mark, and exactly 10:33, I think we kick this off. What I'll do, ladies and gentlemen, I'm just going to keep an eye on admitting people as they come through. And if maybe we could just ask any questions in the chat facility. The screen I'm working on at the moment doesn't seem to give me easy access to questions and answers. But if there's anybody just putting questions and answers, Mark, at the end, I'm sure you could bring that up once we've gone through this flow and cover off. But it's really just to say good morning, ladies and gentlemen. Any questions you've got, just for those that have just come on now, if you could just put them in the chat facility. Once everybody is logged on, it's easy for me just to keep an eye on the chat, as well as just checking for people who are logging on at different times, which is really good. And I hope you are all going to enjoy today. Mark's going to really lead this presentation, and any questions that you want to ask, just to say, put them in the chat facility. I know Beryl's on from Cornwall. Morning, Beryl. You had some really good questions in advance. So Mark, it's now 10:33. You might as well bring up the presentation and well, maybe if you want to do the introduction as I'm watching people coming in, and then we can give an overview and then start.
Yes, certainly, Rog. Thanks so much. So, yeah, what this is all about, whether you're new to the mortgage market or if you just want a bit of extra confidence when you're looking through documents, bank statements in particular today, I'm sure this session will be invaluable to you. Alongside me today is Middlesbrough's answer to the Angel of the North. There he is, Rog Morris. Thanks for joining us, Rog.
Matt, thank you for having us on. I think today's set to be informative, and I think one of the key points I just want to say, Mark, before you go into the flow, was, guys, this is aimed at those who have just started in mortgages and those that have submitted cases to lenders and have maybe been challenged on bank statements. So it's really that introductory to what is logical, but what we've got back from the underwriters that me and Matt work with now, and the underwriters we work with over many times. And I've caught up with, since we put this together with Matt, with some compliance teams, and they still say today, Matt, one of the biggest reasons cases fail compliance checks is because of bank statements. So this isn't high level, this is just a really good refresher for those experienced, and for those new, it's a chance to really think about what it is that you want to look for. So Mark, over to you.
No, perfect. So what we're looking to sort of try and glean out of today is, when it comes to bank statements themselves, are they as simple as we think? What do lenders look for, and how will underwriters assess these bank statements? We'll also be looking to go through the various abbreviations that you'll see on a bank statement and, sort of let you know what they mean, along with some sort of common submission errors or areas that we see. Again, as Rog said there, at Tandem and from our previous lender experience as well. we genuinely want to make the sessions as informative and interactive as possible. Whenever we've run them previously, it really helps when we've got some questions coming in. So please don't hang fire on any of that at any time during the presentation itself. So without further ado, I will share my screen. Hopefully we can see that. Are we right there, Rog?
Yeah, we can see that. That's perfect.
Lovely. All right. Okay. So there's our bright smiling faces, and my halo, as always, is a little bit off center there, isn't it? So that's a good start point for us. Right then. So this first slide, Raj, what do you think this means?
So this was my slide, guys, and it's about when reading bank statements particularly for an applicant you've never dealt with before. So it's a new customer to you. What you want to do, and my advice in my 30 odd years in the mortgage industry, 20 years as a broker, is just stop. If you're having one of those days where it's a Friday and the customer particular is putting you under pressure to get that case fully packaged up and submitted to the lender, and they're really piling that pressure on and wanting you to really get it through and send quickly, and you haven't reviewed the bank statements, I want you to stop. I would say to you, leave it until Monday or when you have time to thoroughly examine. I've seen more broker colleagues being struck off by the big lenders because they didn't verify and check bank statements that could be fraudulent or part of a fraudulent application. And what you can't use in your defence between those big banking giants is, well, I was really busy, I was working really hard, I didn't get a chance to look, I didn't sense check. So it's about really stop and think about every single line on that bank statement. Do you know what the account's for, what the information's for? Is it genuine? And does it match up to P60 and payslips? So you've got P60s and payslips. Does it all match up? That's how I would view it, Mark. What would you say?
No, absolutely perfect. Yeah, never rush a bank statement. Never rush submitting a case to a lender. You whack all the statements across part of the packaging application without really looking at them, because there sometimes can be quite a lot of information on there, and if the client's putting a bit of pressure on to get that application submitted, and you've missed something on there, it could cause the application to decline. It could result in questions that come to you later on during the process that you're not really prepared for. So really taking that time to run through a bank statement, be sure of the information that is contained within it, and to have answers ready for underwriting, I think is the best way to do it. And if anything else, it will just make that whole sort of packaging process, from a fraud perspective, more watertight, but also from a simplicity of process, makes it so much easier and so much smoother for yourself and for the client, because the underwriters, when they do look at these bank statements, this magnifying glass is there for a reason, isn't it, Raj? They do tend to look at them quite closely, so hopefully, say, we'll be able to iron out a few of those points. Now, what we've got on the next slide is just a bank statement, a test example bank statement that we come up with, and we've highlighted some of the areas that we think are the most common ones, for things for you to look out for, just to make sure you sort of can fully package your cases as a lender would like you to. So things to look out for. Now, some of them, like we've said before, may seem really obvious, but you would be genuinely surprised at the amount of cases that come into us at Tandem and that have come into us at various lenders over the years, where either the clients maybe been a little bit reticent to provide you with the full information that you've asked them for, whether it's the documents themselves haven't been checked as closely as you might like them to have been, but these are the areas which we tend to find are worth highlighting, and to try and make sure that process is, like I say, as water resistant when it comes to fraud elements, and slick processing as we can possibly make them. So the first bit on here: fewer than the number of statements have been supplied. So a lender will tend to ask you for 3 months bank statements, 1 month's bank statements, whatever it may be. Now, not to point the obvious out, but page 2 of 3 here that we can see on this slide, fewer than number of statements requested have been supplied. So if a lender asks for 3 months, try and make sure that they're completely consecutive. So, for example, you've got 1, 2, and 3 of 3 showing. Try and make sure that you do give the lender exactly what they ask for. If you're unsure,
Mark, on that point there, just from a quick preset question, which was frustrating Beryl. Morning, Beryl. Beryl's from in Cornwall. I think, Matt, you know Beryl. Beryl says, but often when she's getting bank statements, the last page could be totally blank. It offers the lender no information whatsoever. Why do we need to send that in was the question given.
Oh, right. No, and it's a very good question because, for sure, like you can see you've got the information in front of you, a complete, final page, completely blank. You don't really want to have to scan and upload stuff, which is, in your mind, useless to the lender. But if a lender can see that they got pages 4 of 5 but not 5 of 5, that lender doesn't know that it's a blank page at the end of it necessarily. So if in doubt, just scan them all across, because that's what a lender will see. So it's really, really important, because it's almost like you're going to get a question that comes back, can I have the last page of it, and then you have to re-upload the 5th page anyway, which feels even more frustrating and annoying. So definitely look at the numbering of pages, and if a client hasn't supplied you with the full 5 pages, for example, go back to them before the lender does, because it will just make it a whole smoother process for you. Okay. Right then, so moving on, again, we've talked about consecutively numbered, so make sure that they are. When you're uploading documents to a lender as well, particularly if there are multiple statements, if you can, try and get them into order, because what will happen is, you've got the paper versions of these sometimes, they might be online versions that you have, but if there are paper ones that you're scanning and uploading yourself, if you can try and get them, scanned in order, that will really, really help the lender process the application a lot quicker, because if they're not in order, once they've been uploaded onto systems, it's very, very difficult to separate them, and it makes the underwriter's job a bit of a nightmare, and that in turn can lead them to make mistakes, which no one really wants. We'd much rather it as a slick process. So really look out for those sorts of things to make sure there are no missing periods. With the missing period sort of argument, really, I suppose, point. Do you go back to clients and ask them, for the full statements? And if they haven't got them, there's reticence to supply you with that bank statement, for example, and you might get 100 reasons why they shouldn't provide you with that bank statement. But do be mindful of this. Maybe they're trying to conceal some information. How well do you know that client? How did you get that lead passed into you? This isn't all about just making it easy for a lender and making sure that we've got all 5 pages uploaded because that's symmetrical and makes it look nice. It's not all about that. This is about making sure that your client is not trying to do something that they shouldn't, and you becoming party to that by uploading these documents. So if a statement's missing and you notice it, make sure you do everything you can to get that, and if there is a reason, you provide the lender with that reason. Got anything more to add on that, Rod, or is that well covered?
No, I just think it's just the biggest area where one of the biggest detections for fraud, and to safeguard your job, because if you and Mark, your compliance teams, whether you're a DA or an AR, will fully support you if you raise concerns. So if you see a set of bank statements and you want to raise it with your compliance team, so if you're part of a network or you're a DA, you've got a compliance function, it's certainly worth stopping and just sending over and asking for the concerns. Some of the fraud now of when it comes to bank statements are so sophisticated, it's very, very hard to tell. And remember, it's not illegal to buy example bank statements, P60s and payslips from the internet. As long as they've got genuine mistakes on them, they can actually legally provide them. So I was speaking with one large network's compliance director this morning, and the one emphasis they've got is if you have any doubt, reach out, and also reach out to the lender, because then that shows the lender a positive light that you are looking as well.
No, that's perfect. That's perfect. Okay, move on to the next point here. Normally, we'd expect to see a bank or building society logo on a statement, particularly if it's a paper one. But we'd normally expect to see a logo there. Some internet bank statements or branch prints wouldn't have them. Fair dues. But if you would expect to see a logo there, do look at it, because the quality of the logo can really be a key sort of factor in, some frauds out there. I'm sure we've all seen spam emails that have been sent around where the fraudster is trying to take on a logo that they've got from the internet themselves. So just be very mindful of those things. And we had a case into Tandem relatively recently, didn't we, Rog, where we looked at this logo and it looked genuinely a bit suspicious, and we went through our internal process to check it out, and it was a genuine statement in the end. But you don't know, and it's these sorts of things that you need to be looking at when you have a statement put in front of you. So there we go. When you've got like a branch print, for example, something else to look out for. So and a lot of people these days will get online statements. It's the way that the world's going, but there's a genuine section of the population, I don't want to be statistically biased anyway, but you might find somebody live in more rural areas, someone's a bit older, someone who doesn't work with computers all of the time, someone who's not natural to them to be great with IT. They might well rely on physically going into a bank to get documents for you, and you'll have certain clients, I'm sure, that fit that bill. If they have gone into a branch to get some statements printed out, please, when you're talking to the client before they go in, please try and make sure that they get the branches to stamp them. That's a really a good thing, because if they don't, they sort of go in on the off chance that they get their statements printed out by the branch because they can't download it online or anything like that. The branch will then just give them basically what looks like a little bit of paper, very similar to what you got on the screen in front of you at the moment, with no stamp quite often. If you ask them to get a stamp from the branch themselves put on the statement, that will really help save time, because what will happen is if you don't do that, the client will merrily walk out of the branch of the bank that they've gone into, send them back to you, and this thing might take a week to get that to that stage, for you to then upload it to a lender and they say, well, it's not stamped, it's not got a logo on it, it's not an internet statement, we don't like it. So if ever your clients are going direct into a branch, if the branch still exists, then make sure that they are stamped by the cashier or whatever.
Matt, just one question, just because Hamat's question really flows at this point. Good morning. The question is when will you allow and how will you allow a customer to connect their bank statements so that you can view them directly? Basically, what we've been asked is, will Tandem do open banking, and what's our view on that? Because we know from personal experience that open banking works really well, and it is a technology that we are looking at the moment. Do you want to answer that question?
No, I'll have a go. Yeah, so at the moment, as it stands today, from the mortgage perspective, Tandem wouldn't accept, an open banking. We don't use it as part of our mortgage-based technology. We do in other areas of our business. I think I'm right in saying, Roger, aren't we? We do use open banking in other areas of our business, so it will come. But right now, as of today, we would want, a full bank statement, whether that's internet derived from a branch, or the customer is printed out from their own banking system. So yeah. We require a certification, so the client can literally inform us that they certified it on it. But yeah, so it will come. I think the open banking thing to ourselves. But yeah, right now we don't use it on the mortgage side of the business.
But it is worth mentioning, just for clarity, that with the Tandem Saving app, which is one of the fastest growing online savings apps because of the interest it's paying, it automatically connects to open banking, so that's free flowing of money. So if you're saving money up for tax bills or you're saving money up for a rainy day, you can just move it to and froing into instant access, which is currently paying a reasonable return of interest. We are developing a new piece of software for managing our own platform, so hopefully by next year, Mark, we won't be asking for bank statements again. It will be done through open banking. Right.
It'll certainly make it an awful lot easier, won't it? So yeah, there we go. We'll have to think a new webinar then, Rod, won't we? So okay, move on to the next point on the list. The full bank account number and sort code are not shown. So in this example here, towards this part of the screen here, we can see we've got the account number in, obviously fictitious, but then there's no sort code. It's just ... That's very, very strange and not something we'd expect to see. So just be mindful when you're looking at the detail on a bank statement. At the top corner, you've got the customer's name, address, bank account number, sort code. We'd expect all of these to be showing on a statement that we receive at Tandem. And if it wasn't, we'd certainly be asking the question. So we'd like you to ask the question as well beforehand. So yeah, be mindful of anything like that where numbers don't seem quite right, or they're indeed missing, different typefaces, different fonts being used, anything that makes it look a little bit strange. Be really, really mindful of those sorts of things, because these are the, what will happen is, I guess, when a fraudster does sort of create a bank statement, is that they will use examples that they got from elsewhere, so it just won't look quite nice, quite as clean as you'd expect it to. So anything like that would be a major flag in our eyes. The point about making the customer's, the point 5 on the list here, customer's name and address doesn't match the application for sole and joint accounts. So this is useful to be aware of for a multitude of reasons, really. On a slightly different note, and this tells them of some other webinars that we're going to do later on down the line for you about sort of credit reports and credit files and credit searches. But you see the customer, they tell you what their name is, you get their passport even, and you believe them. That's what it says on there. But then all of a sudden they get a bank statement and a new name appears, or something else crops up that is unusual. It's really, really important to look at the full name and address on an application form to make sure these are real major flags for fraud. If people are giving you different addresses, they're maybe trying to conceal some history. If you see an address on some statements that are historic that they've not told you about, these are real areas that you can need to be mindful of and wary of when you're submitting applications, to make sure that it matches up, because the lender will see it. If you give us a bank statement that's got an address on it that you haven't declared, or the client hasn't declared to you, then there will be questions. And these sort of address situations in particular, or a spelling of a customer's name even, just be really, really careful when you're inputting applications, because it's easier to correct it with some lenders and others afterwards, is all I would say to that. Not every lender's got the same system, and not every lender's got the same way of doing things. So if you can get it right up front, that is like the best way all round. When it comes to, like if you've got a different spelling of a name, or there is a difference in addresses that have propped up as a result of bank statements that come into us, that can result in sort of recredit scoring applications. With the high street lenders, it can result in finding some adverse credit that we weren't aware of in the first place, and ultimately it can result in a case that was accepted at DIP then being declined at application stage, all because of a bank statement, and some information that was contained within it. So, names, addresses, it doesn't say it, date of birth on here, but because this is about bank statements and they won't contain that. But just make sure that information is correct, and you can glean everything from that bank statement that you possibly can, to try and aid getting a concrete DIP that will flow through to an application that completes, because that's what this is all about. Sole and joint accounts as well, so just be mindful of that. Some clients have joint accounts, some have sole accounts. If you ask for 3 months bank statements really quickly, and you get them and they're all from Mr. and not Mrs., or whatever the combination might be, just be mindful of that, because a lender will want to make sure you give the lender what they're asking for ultimately. So yeah, I think those are the points I'd raise around that. Do you want anything else on that, Roger? Have I covered that?
So Mark, there's another, again, some pre-advanced questions. And guys, if you, just as a reminder, if you put it in the chat facility, it's just my screen just got to keep admitting people. So if you've got any questions, just please put it in the chat. But the other question I had in advance, Mark, was the correlation between where the deposit's coming from, how it accrued, and where it originated from. And sometimes that can cause frustration, because it might lead into more and more bank accounts. So it's like, if your direct debits come out of this account, we might need 3 months. We might then need 3 months individual accounts if it's maybe Mark and then Beryl as the other one. And then, but they've got a joint account, so we might need, in other words, 3 lots of 3 months. But then it's where that money originated from. So that's part of that money laundering exercise to see where that deposit's coming from and all those questions. That seems to come up a lot, and it can cause some frustration because why didn't you tell me that up front, Mark, is often what I get back from brokers.
Yeah, no,
an underwriting point of view.
Really good question, that, because I mean, as a BDM who's been active for around about 20 years now, you wouldn't think it to look at me, would you? But as a BDM who's been going for about 20 years now, like the some of the most common frustrations in and around, like, you've asked for this bank statement, you've asked for that bank statement, is derived from deposit sources. A lender needs to be happy that the client has built up those funds themselves, or they come from where they say they come from. It's a real big flag to lenders. Solicitors will check it as well, at various stages of the process too. But the deposit needs to be verified by the lender, and a lender needs to be happy that it's come from where we say it's come from. So it could be multiple accounts are required. So anything that we can do to make it as simple and straightforward as possible, but we would be looking at a bank statement to follow that trail of money. If the deposit has come from, like, savings, for example, we're looking for lump sums that ultimately they're going to this, into a bank account. And if there are any sort of large lump sums of, falling into the bank account, we'll be looking at to see, is it a personal loan? Is it a deposit from a family member or a non-family member? They'll be looking at the name that's brought it. So we're really looking to try and make sure and just measure that audit trail back to say that it's from the source that the client says it from. When it comes to, like, savings, deposits are from savings, like, how long back do you need to go? Well, that will vary from lender to lender. So I just sort of say, if ever you're unsure, please speak to your local BDM if you can get hold of them, or do live chat, whatever you can with that individual lender to find out what they are looking for. As a very generic sort of statement, the lender needs to be happy that the client has stayed at that amount of money. So if you've got a client that is, earning £20,000 a year, for example, and when you sort of take their income, their expenditure out of the situation, they might be able to save at best, like 200 quid, 300 quid, 400 quid a month, in their current situation. But somehow they came up with a 90 grand deposit. Now, over 3 months, do you mean you're going to get questions, aren't you, on that? So these are the sorts of things, that an underwriter will be looking at, and it just needs to make sense. That's what we want. We want to be in a position where it makes sense.
Yeah, Mark Redwire's asked a good question. What happens if the deposits come from a bank loan?
A bank loan? Well, so oddly, most lenders won't like it if it's come from a loan. You'd have to check their individual criteria for sure. Most lenders wouldn't like it if a deposit came from a bank loan. There are a couple of lenders out there that I'm aware of, from my experience, that will accept a personal loan as a form of deposit. And very few in the specialist lending area market, other than Tandem. I think that was a nice one, wasn't it, for to ask that question? Maybe you knew. But yeah, at Tandem, we would accept a personal loan as a form of deposit. So yeah, that's an unusual one that we would allow in our criteria. But again, when it comes to the bank statements themselves, we are going to be looking to find out, where this money has come from, to make sure that nothing's suspicious is going on. And like I say, it needs to stack up. Okay. Moving on then, this example here, we can see on the screen in front of us at the moment, you've got various columns on the bank statement: dates, descriptions, money in, money out, and balance. And that balance category, or column even, is completely blank. So that would be a major flag to any of our underwriters. You would expect to see on a full bank statement a copy or a running balance going down the right hand side, or wherever they put it on the statement. But we would expect to see that. So if ever you get a bank statement from a client and it has no running balance on it, I suggest you probably go back to them and say that this isn't really going to be acceptable to the lender. They'll want to see your current position. It could be fraud. It could be just a mini statement or something like that. It doesn't necessarily have to be fraud, but it just could be, that it's a mini statement or something, not really what the underwriters or the lender will be asking for. It's important because we need to know, like from an underwriting point of view, this is not fraud, not fraud related, but we need to know from an underwriting point of view that the client can afford their mortgage. So we need to know what their balances are. It sounds stupid, but we need to know what their balances are in order to make a decision on whether that client can afford the mortgage. So a running balance is really, really important to us. On that point there about reading the bank statement, reading the running balances, reading what goes in and what goes out each month. We're really getting into sort of some quite deep depth sometimes when it comes to, should a lender do a case or not. But we tend to see quite a lot of self-employed cases at Tandem, and we also tend to see quite a lot of debt consolidation cases at Tandem. Okay, and these are two sources of case, two types of case where a bank statement can make or break it. It really, really can. And if you can use these bank statements to your advantage, let's take it away from the whole what you expect to see on. If you can use a bank statement to your advantage to allow a case to get through to offering completion by being a really skilled broker, by doing this, it will really, really help. Your clients will be really grateful, and it will obviously work out best for everybody. And what I mean by that is, when we do self-employed clients, we ask for we use the latest year's figures. Okay, so we can be the most recent year figure lender. Now, not all banks or building societies do that, but it's what we do. Now, the bank statement then becomes quite important, because what we will be looking for when it comes to money in, money out, is, do they earn a level? Is enough money coming in? Does it roughly correlate with the sort of income figure that we're going to be basing from? And of course, the accountant certificate will come into this, because it's not all about sales and turnover, but we will see the sales and turnover that are coming in within the last 3 months from those bank statements. And they do give us an indication as to the levels of income that are going to come out of the other end in profit. For example, if you've only got, £5,000 in turnover sales that have come in, there's no way that you can have 10 grand in income coming out the other end. So it's quite so look at things like that. When you have got a self-employed case in particular, it can be helpful if you can get your clients to have nice sort of I know one broker who springs to mind as I'm talking at the moment now, where I remember him telling me how he really had quite a strong word with his client, because his bank statement had his own personal his own personal affairs going on. He had a rental property which fed into his own personal bank statement, and he also was a painter and decorator, and he ran that through one set of on a self-employed basis, ran it through one bank statement, one account, and it was just a nightmare. There's in and out all over the place. So it makes it really, really difficult for the client to manage his own money, let alone a lender to work out what's going on, and make a lending decision based on it. So, if you are talking to customers that are self-employed, obviously it's their choice, do it how they want. If they're limited companies, there are sort of differences in what they have to do and what they don't have to do. But if as a sole trader, for example, you can use, or you do see people using one bank account, which makes it very, very difficult for them to manage their own finances. So being quite clear, separate account for separate things is not a bad idea, maybe, and it will help us see what income is coming in on that basis.
Mark, you raised a good question there, and it was something, again, we got in the pre-webinar questions where people had emailed through, was it's really can be quite hard to accurately assess the self-employed's income, whether there be a sole trader, SA302s, or limited company accounts. And it was really just to remind everyone that we are running How to Read account session on Tuesday the 26th of September, and we will have a subject matter expert. So we've got a really good chartered accountant who literally spends all day long preparing accounts and supporting mortgage applications with mortgage brokers. And that kind of correlates in what you're saying now, Mark, is it's important that you as the broker, when assessing affordability, are confident that the declared income is there and it's there to support a mortgage application. That responsibility isn't just borne by the lender. That's right, Mark, isn't it?
Oh no, definitely, and it just get that whole ease of process through. So yeah, it's if someone's telling you they earn 50 grand on and their bank account show different, and that's something that you need to question, isn't it? So very much so. The other part I wanted to raise in and around the bank statements themselves are, like I said, we do quite a lot of debt consolidation cases at Tandem, and sometimes these cases can be quite marginal, for want of a better phrase. And by that I mean, like the customer's racked up some credit in the background. It doesn't necessarily mean they're underwater, but it means that the financial pressure on them is stronger maybe than it could be if they wrapped it all up and did a debt consolidation case. Now, if it's the right advice for that client to do a debt consolidation case, the bank statements, they can be quite busy. They can be ones that should be, the balance is showing they might be going to their overdraft and things like that. It can be showing they're starting to be sort of see signs of financial stress, depending on what stage they come to you to sort of raise their concerns and ask you to help them out by doing a remortgage and wrapping it all up into one, maybe. So if you can be knowledgeable about that client's bank statement and pre-armed, so that you can go to the lender and explain why the statements are looking the way that they do, and that the benefit of doing this remortgage would be saving the client 500 quid a month, genuinely it's worth knowing and worth having in the back of your head that you've seen that client's bank statements. You can see that they're kind of going like, in a cycle of being £100, £200 overdrawn at the end of each month, and if we did this remortgage for them and consolidate their debt, that would save them 500. So it puts them back, in the black, if you like, and away from the red. God, what was that? That's a darts going out there. That was bullseye almost out of the but yeah, so literally, that's what we want. So if you know that doing this remortgage will save them 500 quid a month, it's genuinely worth making these points to lenders, because I've been in situations working for lenders where a case has been declined, debt consolidation maybe, for example, it's been declined by an underwriter. And the brokers come to me and said, Mark, like, do you really agree with this decline? Okay, they are going £200 overdrawn at the end of every month, but by doing this debt consolidation job, you're saving 500. We can see that it's not sort of getting worse for them; it's quite stable. But they just can't get out of this cycle that they've been dropped in because they went for a divorce or something happened that set them back in their finances. They relied on credit for a certain period of time. They just can't break out of that cycle. And I've certainly worked with brokers over the years, and I've said, look, if you can get me like 3 months bank statements, send them across to me. I'm more than happy to go through them with you, and we'll build a case, that we can put to underwriting. And as long as it's a sensible case, as long as it's a case that proves a point, we have over the years changed lending decisions, not all the time, but we have done. I know we have, that otherwise would have been declined if they just got left, with the underwriter's decision. So bank statements can be a strength, if you know why things are happening on those statements, and the history of why they panned out in that way. Okay, all right then. So moving on, I'm conscious of a bit of time here. Actually, it's happened again. So we're 10 past 11. We've got 20 minutes to go. So I'll make sure that we get through next, because we've got some really interesting bits on the abbreviations that I know Rog likes some from previous. So we'll make sure we get to those. Right, here we go. Point 7, the statement does not show evidence of regular credits, declared salary, self-employed income, rental income. So yeah, any credits, like, so for example, you got your pay slips there, make sure they match. That net pay needs to match what is on the bank statement, and it needs to match exactly, because that's how you'd expect. Look, if you've got a client with a pay slip which says they earn £1,872 and 12p, we need everything to be shown on that bank statement and 12p. It literally needs to match perfectly, because that is what we would expect to happen. You will find, and I've seen this, where sometimes maybe if someone works for like a family business, that it doesn't always work the way it does. So if you notice any differences at all in what shows as an income credit on their pay slip through to what's going on their bank statement, that's a real sign, that you need to be, maybe concerned about, because we'd expect it to match. We'd expect it to match without fail. And if it doesn't, we'd need to be fully investigating why before we could process the application. Rental income, you have multiple properties in the background. It's something I sort of alluded to earlier, when you're talking to clients and they don't make it easy for you, if they're using multiple or a bank account for multiple reasons. So just making sure that any income that goes in, you can account for just as much as you can the expenditure and things going out. Okay. No. Point 8, statement has no expected outgoing activity, daily expenditure. So if you've been given a bank statement, the lender asks for 3 months bank statements, the client gives you 3 months bank statements, and there's no water bills, there's no utilities, there's no mobile phone usage, you upload it to the system, please expect to get a question back, because people need these facilities, to live on. We would expect daily expenditure and outgoings to be on a bank statement. So be mindful of things like that when you are submitting them and uploading them to a lender. Okay. The final point here we've got is, for example, the statement for nominated account for debit mortgage payment hasn't been supplied. So, for example, if you are completing the application form and the client wants their monthly direct debit to come out of account A, for example, and then you send the statements for account B, again, we will be aware of the fact that there are other bank accounts that are in existence that maybe might have been concealed deliberately or not from ourselves. So basically, we want to make sure that we've got a statement for the nominated bank account as well, which we pay the mortgage payment from. And again, be careful of that. Sometimes I've seen clients try to pay for their mortgages out of business accounts, various other accounts that are just not permitted by the lender. So, if you do get a request to make a mortgage payment from an account that's not owned by your client or in any way, like that is a flag that you need to sort of be mindful of. Anything else to say on that, Raj, before we move on?
No, it literally just my top tip from all this is just make sure, for example, with employed people, that the salary credit, the net figure on the pay slips correlates to the figure on the bank account. Just that one tip can really detect fraud, because we often find literally that's what we'll spot, and it's one of the things Indra looks for. But no, other than that, no more questions.
Yeah.
So
what before I do move on, just one thing you said there that we haven't covered off in this is like, just notice the amounts. I mean, normally people get paid something and 12p, don't they? I mean, if you're seeing lots of zeros, like they get paid 3,400 to the penny, again, that is equally something to be sort of mindful of. So just make sure they match, and make sure it sort of give it a bit of a sense check. Yeah, exactly. Okay, so the next section, I believe, Rog, is the abbreviations.
Yeah, so guys, if you were reading a set of bank statements now, Mark, I've got to ask my pet question. You're reading a set of bank statements and you look on the abbreviation and you notice PP phones. So you're reading the set of bank statements and you see PP phones. What do you think that means? So it's one that I always use as to why this particular educational session is quite good for those relatively new to mortgages, Mark. And the answer is Paddy Power phones. And I'll let you read through this. There you go. Well done, Kev. Well done, Besh. I don't know. Brilliant, guys. Thank you for putting that in the chat facility. And honestly, it can make a lot of difference, because it's like you sometimes realise they spend an awful lot with mobile phones, and it's not. So, Mark, take us through some of the other abbreviations. Great.
Yeah. No, certainly, because we're right on the topic of gambling, online gambling in particular with this. So you can see here we've got Bet365 will be B365. They've quite cunningly taken the word bet out of that, B365 Internet, and made it look like a communications and internet supplier. Coral CI Limited, again, a gambling website. 888.com, Wink Bingo, that's really well masked. Cassava Enterprises. Now, underwriters will be aware of what these things mean. So if you're not, it could lead you to submit an application that gets declined. Whereas, if the client was told they need to change their habits, they maybe could have made it.
Yeah, Mark, a lot of people have asked me over the years, why do they abbreviate in this way? And unfortunately, it wasn't necessarily originally done to mislead lenders when it comes to confusing them from affordability. It was maybe more that the other halves on shared bank accounts might realise they were gambling, and they might actually hide it. Another one that we are seeing more of now is payments to websites like OnlyFans. And we're not trying to be moralistic here, but I remember seeing an account once where they were paying as much as £4,000 a month to a particular website So again, it's not just gambling, but it can be other websites where large monthly contributions can be going out. So Mark, if you've got a set of bank statements,
got to learn from your mistakes, right? Can't you? Got to learn from your.
Yeah, we also have seen a recent application from somebody who makes their income from the same sort of website and make a lot of money and pay the taxes. So it is a question now of, Mark, we recently have, we won't name the broker or the client, recently seen a set of bank accounts where there was a significant amount of online gambling disproportionate to their income, and we declined it. So what are your sort of top tips that if you are a broker reading a set of bank accounts and maybe the last month, say month 3, showed there were online gambling, they were spending quite a lot, but the recent 2 months they've now stopped it, that you've had that conversation that they have learned and are no longer gambling, what would your advice be when sense checking bank statements to whether proceed with an application or common sense wait until the applicant has changed that monthly spending? What's your view?
Yeah, no, definitely. It's I mean, and again, to take it a step back, it is very much a topical situation. It's so easy to be involved in gambling online, whether it's a small amount or a large amount. It is so easy. You can't watch a sports game of any sort without the adverts containing the odds and what you can win off the back of it. There's a whole the mobile, having a mobile phone next to you when you're watching the telly. It's so easy to place a bet and to get involved in gambling activity recreationally, and I guess the difference, whether we like it or not, is that it is all online. It is all tracked. Whereas beforehand, if you're watching a game of football or darts or whatever at home, sat on the sofa, you physically used to have to go to the betting shop, didn't you, and give them a tenner or whatever you had to do. Whereas now, from your sofa, you can start racking up gambling bills and what have you that will show on your bank statements, which could impede your mortgage application. So it's so easy to do, and it is a large part of our society. I think we do accept that. Now, the nature of gambling, as in its addictive nature, does mean that lenders are cautious around clients that have been gambling. Individual lenders will have their own rules on it. I wouldn't even attempt to tell you what a blanket rule would be on this subject, other than if you do notice a case where there is online gambling, or there's gambling going on it, maybe speak to the lender before you submit the application to get their view on it. But yeah, I mean, there's a few things I suppose that immediately spring out to me, and I guess the first thing is is the client gambling their own money, or is it an overdraft, if that makes sense? So someone who's gambling their own money, that's different to someone who gambles within a bank overdraft or using other credit to fund the banking. So that's the first thing which sort of dictates whether or not we should view it as a problem or just a nice recreational activity. So that'd be the first thing I would say. I guess then you're looking at things like the percentage of their income, for argument's sake, because someone who might bet £200 a month, if they only earn 15 grand a year, that's different to someone who bets £200 a month if they earn 200 grand a year. So again, it may well seem very simplistic, but these are sorts of things that lenders look at when they decide if they want to lend to that client, if they can see betting activity. Again, like the frequency of betting, if we can see people, and we do get this, like literally where there are statements that are like littered, with 3, 4, 5 bets every single day, that then gets into a habitual sort of process where we think, is this more of a problem which might suck the client in an addictive sort of way and mean that the figures, even if they're kind of okay at the moment, that person relies on gambling. And whilst we don't want to be judgmental, we do we want to make sure that the client doesn't overcommit themselves, and ultimately we don't end up having to sort of take proceedings forward to repossess properties and stuff like that, because their problem, is, their gambling has become a problem, and then that has caused them to, come into financial hardship. So those are things that we look for as a lender as well. One of the things that always makes me
one question from Roxy. Good morning, Roxy. Roxy's just asked, what would the view be, what would our view, or lenders in general, on national lottery payments? Because the weekly, possibly twice weekly, similar with postcode lottery. But I think it's your point, Mark, that if you're doing a tenner on a Wednesday, I think is it, and then a tenner on a Saturday or 20, it's not a specific, it represented to your income, as long as it feels easily within the affordability, and it's just regular parts. Lenders don't have issues. So I think you covered off all those points. And Roxy, I hope that kind of what Mark says kind of answers your question.
Yeah, and like alongside that as well, just sort of be mindful of the story. I genuinely remember a case, and I'm West Country, if you can't tell from my voice after 50 minutes, but Cheltenham Races is not far from where I am. So it's a big local event, and I remember we had a case that came in during Cheltenham Races, if you like. So the bank statement showed that day in Cheltenham where the guy or girl, I remember it I don't know if it was a female or a male client, but I just remember their account got absolutely battered on this one day, and it wasn't normal activity from the client. You could tell that they'd been on a day out, they had probably too much to drink, and the bookies had taken advantage of them. That's what I reckon. But so knowing the story behind it sometimes can help, so be mindful of what sort of sporting events are on. You might sort of see and even if our underwriters, they might not know that it's Cheltenham Festival, they might not have any interest in horse riding whatsoever. But what I'm saying here is just try and know the story, try and know these bank statements, and try and understand why they're saying what they're saying, because you can't hide it. It's all on there, and just make sure that you know the reasons for it and whether it's likely to continue going forward. So the abbreviations used from a lender is really important to know. And I can see another one at the bottom there, Who Internet, that's William Hill. So again, gambling related. Just for the sake of saying it, Tandem's view, we've actually got, I quite like the stance that we take on gambling, and we say basically 10% of the client's income. If the client's gambling each month more than 10% of their income, then we will be investigating it. Under 10%, we can be quite comfortable, is our view at Tandem on that. Okay.
Thanks, Mark.
Okay, so moving on then, we've got some abbreviations. We probably won't run through each of these individually, because it will, it possibly might become boring. But what I would say is that we are recording this session. If you want to keep this, if you're administrator, or maybe it's the person who looks through the bank statements, obviously you're responsible for it, but whoever does that job in your office of looking through these statements is not on this call at the minute, and you think it'd be useful to them, we'll make the recording available to you in the future. This might be something that you might refer to. You might have that sort of moment in 3 months' time where you think, I wish I could remember what that abbreviation meant. We'll make sure these are all available for you, so that you can get access to that. Is there anything you want to particularly sort of bring out in these, Rog?
I think really it's just we're covering kind of the big ones. I think people were very comfortable with what direct debit is, what SAL will be for salary, the simple points. And guys, we have been asked numerous times, will we get a copy of this presentation? It will be available for download. Eddie, good morning. Eddie, brilliant question. I owe you a tenner for that one, metaphorically speaking. Where can we find the recording, or will you email a link? So what we'll do is, once the recording's gone out, it's run through compliance, it's top and tailed, it's cut down, because the recording starts as soon as me and Mark had come on. So what we do is we just get it into a nice format, and it'll go on Tandem TV. So what we'll have is, on the intermediary page, the top right-hand corner of that page, soon, it's in the next couple of days, we'll actually have where we're going to start hosting all these videos and recordings. Yeah, Eddie, maybe when I see you next, I'll give you that tenner. But thanks for that question. So, and I think with all these stuff, as you can see through, it's becoming quite simple, Mark. So yeah, it will be. We don't need to go through these. I think it was just more about if you do see an abbreviation that doesn't make sense, a bit like there with Vodafone, CFU, it's just some of these abbreviations don't necessarily make sense. It's just worth Googling them. And then what you can also do is we'll maybe look to produce a fact find sheet as well.
Yeah. From Tandem's perspective as well, and this, I guess, is for use for Tandem applications, if you like. But on our website, we do actually have a bank statement guide that you can refer to, which has got a whole host of like hints and tips and pointers as the sort of things that we're expecting to see as a lender. And in many ways, you could argue that's no different to what other lenders will want to see as well. So we do have a bank statement guide on our website under the resources section, which again, just to draw to your attention, if you weren't aware, and other lenders might have similar things as well. If you're if you're looking around within that. So perfect. Okay. Any more outstanding questions, Roger? Have we answered them all as we've gone through?
No. How many more have we? Was that the last slide when it comes to the... So, guys, what I would say is those that have listened in and anybody else that's within your teams want to watch this, hopefully this recording will be available pretty quickly. Next week, we're doing how Tandem can help you from a point of view of pre-vetting an application. We're going to have one of our underwriters on screen for that, and it's more about just approach when it comes to specialist lending done generically. It's none of this is about promoting Tandem. It's about supporting you and just why consider certain lenders. And there's some brilliant lenders out there at the moment, right across the spectrum. Mark won't be with me on that one because Mark has to be at an external event. But then on the 19th, Tuesday at 10:30 a.m., Mark's going to take us through credit files. Now, if there's one expert in this industry at reading credit files and what that means, will be Mark on that session. And then on the 26th, Tuesday at 10:30, we're going to how to read accounts. And Craig Hart, who is a chartered accountant, who has about 550 customers he looks after, deals with mortgage applications, will interact with that session as we go through examples, SA302s, tax calculations, and limited company accounts. And then on Wednesday, the 4th of October, we're going to talk about the legal process, about why you don't necessarily need a conventional legal representation in a remortgage. And we'll have Leila from JMW on that session, Mark. And then plenty of more educational ones to come. We'll rerun the buy-to-let masterclasses. Even though we don't do buy-to-let, it's trying to give you that informed view of what we're trying to put across today. And we said we wouldn't keep you more than an hour. So from our point of view, I just want to say thank you so much for everyone listening in today and really appreciate your time. Mark, is there anything you want to add before we tap over that?
No, only just to reiterate, thanks. I appreciate how everyone's time is really, really valuable. So thank you so much for joining us on our first webinar. And as Roger said, we've got many more planned for the future. So hopefully you'll be able to get yourselves, or anyone else in your office that you think might benefit from these sessions onto those sessions.
And guys, I know this was basic, but the idea was, unfortunately, so often we can make simple mistakes, so we don't think about things, so it just helps. So thank you for all the kind comments, and hopefully if there's any other subjects, please let us know. But we want to try and do this without any spin from a lender, because you are the brokers and it's your business that pays our wages. And I think more lenders should really understand that when it comes to things like product transfers. You as the broker who've given the real advice when that was introduced, the lender should always remain with you. So thank you to everyone watching. It's goodbye from me and it's goodbye from him.